Hello everyone, this is Jordan. This video is being recorded on the afternoon of Friday, May 10th, 2024. Thank you so much for tuning in. Hope you all had a great week. And in this video, we're going to wrap up the week and talk about how gold and silver stocks are outperforming gold and silver. And they're hinting at what could be coming over the weeks and months ahead. And that is the next leg up for this sector after that huge breakout we had in March. So let's get right into it. So starting off, we have the GDX advanced decline line. That is here at the bottom. GDX is at the top. So these are only closing prices. And if you don't know, the advanced decline line is a trusty leading indicator for the overall stock market. The advanced decline line, people follow that. You could follow it for any index or any basket of stocks, any sector. And what the advanced decline line measures is essentially how many of the stocks within that group are rising or falling. And then when you see it charted, it's really a cumulative measurement. So you're doing it daily, and then there's a cumulative measurement, and that's what we see right here for GDX. And typically, when a market is rising and it starts to fade and it looks toppy, then you'll see the advanced decline line will weaken. It'll warn of that, and vice versa. And so here's an example of that right now where this is something I noticed in particular after Wednesday. I mean, after Wednesday, the GDX advanced decline line was right here. It had already broken above this April peak, whereas GDX was right here. So GDX was a little bit below its April peak, yet the advanced decline line had already clearly broken above it. And this is something I noted in the video last Friday, was that the advanced decline line was starting to show positive divergence. So we can see it now. You can see it from the highlights here, how much stronger the advanced decline line has been compared to GDX. And what this means is that there's real strength in GDX. The participation is strong. This isn't just being led by a couple stocks. This is signaling that even during this correction, not that many stocks were going down. And so now we see, as GDX has closed at a higher high, well, it did yesterday, we see how the advanced decline line already did that a couple days ago. So that's a good sign. And then if we're just looking at price, we know that the miners have been leading the metals. So the miners today, they were down a tiny bit, but if you look at Thursday's close in all these GDX, GDXJ, SILJ, the daily close on Thursday was higher than the highest close in April for all three of these ETFs. Now, this is a bar chart, so we're looking at intraday prices, and we can see, I'll just focus on GDX here, we can see that this is a bullish correction. And this is textbook bullish action, people. Strong rise here. This was a bull flag. I noted that in my premium updates. Another strong rise here. This is bullish action because the market is consolidating and digesting this run right here. It's doing it bullishly. And if we carefully look, you can see GDX, kind of tested support there, tested support again. Then you had this little weakness here. You really have to zoom in to see it. But that's 1, 2, 3. And then after that, now we can see GDX is pulling away. It's attacking this resistance. And so even if GDX and the miners were to sell off and go like this the next couple weeks, it's still setting up for a move like this. So, and I think I said this in recent days, this is just bullish action across the board. And so these red resistance lines, for GDX, this is going to be the next target. Same thing for GDXJ. Again, maybe they'll consolidate more for a couple days or a week, but the path of least resistance is higher. And by the way, when we look at the metals, gold isn't even close to getting back to its April peak. It's like $100 off of it. Now silver's a little closer, but so there's several examples here, or at least bullet points as to confirm how the miners are leading the metals. Okay, so let's wrap this up looking at a couple of charts for the metals. Gold daily candle chart here, silver daily candle chart. Now this is gold divided by silver, so the gold-silver ratio. This is on the cusp of breaking down from this trend line. Now, if you look at a 2 or 3 year chart, the trend line also comes in pretty close to what you're seeing here and now. So during this next run, I think you're going to see silver start to not only outperform gold, but it could strongly outperform gold as you see silver get to that $34 target. Now, silver came down. It came down to 26.30 It didn't fill this gap. Maybe it does in the next couple weeks or something. I mean, that's possible. But at this point, this is a pretty good rebound off this support. So I'd have to lean towards it's not going to fill this gap. And so we can see there's some daily resistance at 29, strong candle for silver. So silver is, close to this area, far more so compared to gold, where we can see this is kind of choppier action. But interestingly, this gap at 2240, I've been talking about that. We have the 50-day here. So this 50-day will keep moving like this. So maybe gold will not fill this gap at 2240. Maybe it'll just rally here and kind of go sideways before breaking out. And maybe it tests the 50-day moving average again. I've looked at the real bull moves in gold. And I noted in a video, like even a year or two ago, how when it corrects in a bull market and it's running, it's either the 50-day, 100-day, or 150-day. In half of those instances, it tends to be the 50-day. So if gold, look for it to test the 50-day at some point and probably bounce. Yes, gold needs some more time, but this is just a really good setup. And again, the miners have already closed above this level. So that's a great sign. And let's wrap things up with the weekly candle charts. Silver is the one that's more interesting. This weekly resistance, I'm looking at about 29. Now, if you're using only closing prices, these two closes here and here were higher than all of these weekly closing prices. But I'm looking at the black candles here and these tick marks. So I'm drawing it here. And this comes in, it makes sense putting it right here because the highest weekly close here was just below 29. So call it 29. So weekly resistance at 29.00. The previous resistance at 26. So this came down to 18. So that's how you get the measured upside target of 34. I don't want to keep babbling on here. I don't want to make this video too long because I have to get ready for my presentation tomorrow. By the way, this video is being recorded in beautiful Vancouver, British Columbia. I think I forgot to say that in my intro. But that's all for this video. People, I don't want to sound like a cheerleader or a perma-bull here, but I expected a correction, thought the market would hold up really well during the correction. Gold and silver in the mine, they're acting even better than I thought they would, in this correction. That's just telling us the path of least resistance is looking to be higher. So you got to get positioned if you're not in this sector yet, because there's not going to be any big corrections coming, at least not this year. We'll see. Maybe when silver gets to 34, gold to 2,700, we'll see. We'll follow all those indicators. We'll let you know. But for here and now, this is just a really bullish market that is going to move higher over the weeks and months ahead. That's all for this video. Let me know what you think. Leave a comment. Say hello if you see my presentation tomorrow. And I wish you all a great weekend. And if I don't see you tomorrow, I'll talk to you again next week.